Time for the call of the day. U.S. Steel upgraded today to overweight, named a top pick at Morgan Stanley, the price target to 40 from 25. I know you don't own U.S. Steel, letter X, but you do own Steel Dynamics. Jimmy, of course, owns Cliffs. So you guys play in the steel space. Do we like these stocks here, yes or no?
Well, U.S. Steel, yes, because I believe a deal will ultimately get done. U.S. Steel has indicated there's been specific interest from other suitors beside Cleveland Cliffs. There's three areas of the economy in which demand is going to come from. It's commercial construction, it's manufacturing, which have been challenged, and then the wild card, Scott, is automotive. And automotive, because of the UAW strike, you're seeing a pullback in a lot of that demand. I believe that's temporary. You've also seen that steel prices since April are down 40%. So you've seen a little bit here of a pullback for a lot of the steel names. I'm comfortable buying some of these steel names because I think that the demand comes back once we get a resolution to the UAW strike. I think the automotive sector will bring back that demand. Steel Dynamics is in the Joe T strategy. I can't speak towards what we're going to do on Halloween. That's when we'll be rebalancing.
Would you buy letter X personally?
Collectively, yeah, I think letter X at 32, where are we, 32 and a half, somewhere around there. I think that's a spot you could buy it because I do think a deal, or at least some form of the assets, are going to get sold.
You just sold, speaking of FCX last week, we talked about it, so it's material stock. Do you take the other side of that, as negative as you are on the
No, I think steel, this is economy? An ARB call. That's purely what it is. This is not a fundamental call. What the analyst is saying is somebody's going to buy them. There are already a couple of bids on the table, so it's going to be worth 40 to 45. It's actually a call. It's risky. We've all seen deals walk away, and if Cleveland Cliffs is the winning bidder, it's going to take a while because Lena Khan, doesn't want to see anybody merge. She's not a capitalist. She's a socialist.
Right, but her hand might be weakened.
She's still going to sue them.
Late.
She's still. It is, but it'll take a while. This deal wouldn't close for at least a year or so. So I'm not, and I would not own the steel stocks here. We've seen, away from the strike, we've seen demand start to falter. CarMax told us, look at used car prices. Look at the incentives on new car prices. So it's not where I'd be. And in fact, if you go historically, and this is what Dave always says, the pillars of the economy, you want to tell how the economy's going? Look at housing and look at autos. Autos, we know, start to come down. Housing, that's going to come down. It's on borrowed time because of lack of inventory. But are you going out and buying new houses now with the mortgage rates where they are? Of course you're not.
So you sold Freeport to Belsky, who owns it.
Yep.
And Newmont. So what's your take?
Got a great deal. Thanks, Steve.
That's a big position you were buying from him,
Yeah, I know.
Talk to me in a number of months. I believe in the copper story long term.
Yes.
And Brian O defaults to long term when he makes a short term mistake. So yes. So in 10 years, that's going to be fine.
Well, when you make mistakes, period, Steve, we're here to pick them all up. So on that,
go ahead.
I think next year the market's going to be much more cyclical. We're overweight materials in Canada, so copper and gold and forest product stocks. We're neutral here in the U.S. It's not as big of a part of the index. So we like copper from the thematic longer-term perspective of batteries and the like. But we think materials are going to do quite well. I think materials are going to be a sleepy sector next year. I really do. A sleepy winter.
Shan, do you agree with that? A sleepy winter for materials. What do you think?
I think that materials are facing some of the same supply issues that we have in energy, Scott. And Brian makes an excellent point on copper. It takes a very long time to build a new mine, and we are seeing yields come way down on the copper facilities that are already in place. And so if you think about this infrastructure spend that's already pent up, if you think about the upside could be China. We really haven't seen a recovery there, and there will be stimulative spending where they spend it. But I can't imagine that we won't see some pickup in construction spend here in Europe and in China over the next couple of years. Could be sneaky, especially in some of the individual commodities.